Okay, good morning, everybody, and welcome to the NTG Clarity Networks Inc. Q2 2024 earnings conference call. My name is Adam Zaghloul. I am the Vice President Strategy and Planning for NTG Clarity, and I'll be hosting and delivering this morning's session. So on the agenda for this morning, I want to go through some highlights on the financials and operating performance in Q2, give a little bit of a high-level overview of the company, especially for any new or prospective investors who are joining us today. I'll then do a little bit of a deeper dive into the financial statements themselves, and then finish things up with a question and answer session with a few questions that you, the audience, have written in ahead of the meeting. So I just want to point out that the full report, so that's financial statements as well as the management's discussion, has been filed on SEDAR, and you can find it there. And the purpose of this presentation is to really summarize the information that's already been reported through that medium. Before I kick things off entirely, I need to provide a disclaimer about certain forward-looking statements, and that goes as follows. So certain statements in this presentation, other than statements of historical fact, are forward-looking information that involves various risks and uncertainties. Such statements relating to, among other things, the prospects for the company to enhance operating results are necessarily subject to risks and uncertainties, some of which are significant in scope and nature. So these uncertainties may cause actual results to differ from information contained herein, and there can be no assurance that such statements will prove to be accurate. Actual results and future events could differ materially from those anticipated in such statements. These and all subsequent written and oral forward-looking statements are based on the estimates and opinions of management on the dates that they are made and expressly qualified in their entirety by this notice. Company assumes no obligation to update forward-looking statements should circumstances or management's estimates or opinions change. So with all that said, welcome again to NTG Clarity's Q2 2024 earnings conference call. 2024 really has been an amazing year for NTG Clarity. Coming out of 2023, we had already seen 57% revenue growth on the top line and 190% growth in the net income, and we decided to set even more ambitious targets for 2024. So in 2024, we're coming into the year with targets of $50 million top line and a 10% bottom line net income margin. It's really incredible to note that thanks to all the hard work and dedication and commitment from the NTG Clarity team, as well as the trust and confidence from our customers, Q2 2024 is our 7th consecutive record-setting quarter when it comes to revenue. So Q2 revenue was up 96% from this time 2023 to $12.4 million. And year-to-date revenue is up 94% from 2023 to $24.2 million. And the results that we're seeing are not just limited to the top line. Bottom line net income is also record-setting for Q2. So Q2 net income is up 250% to $2.4 million. And year-to-date net income compared to 2023 is up 260% to $4.8 million. It's important to note that in addition to this, NTG's current work on hand, which is defined as unbilled POs as of June 30th, 2024, and any POs and contracts that we've announced since then up to this date, is $26.7 million. So that, in addition to the $24.2 million that we've already billed in revenue, puts us in a really strong position to meet our ambitious targets for 2024 of $50 million in revenue and a 10% net income margin. And just to add on to that, a couple of improvements that we've made in our operations, investments that we've made in late 2023 and early 2024 have led to our operating and net income margins, net income specifically being closer to 20% for the first 2 quarters of 2024. And this has led management to reconsider the targets, and you can expect over the next couple of weeks for an announcement to come out if seen fit to do a little bit of an upgrade to the guidance coming into 2024. So overall, really excited for all the growth that we've been seeing. I know a lot of hard work has been going on from the NTG team. Before I dive any deeper into the financials for this quarter, I want to give a little bit of context around who NTG is and what we do. This will be especially useful for new and prospective investors joining us. But let's get started. NTG Clarity is an established, growing, and profitable company. We've been providing IT digital transformation services for more than 30 years now, founded in 1992, and we have been founder-led since then. Our main customer base is Tier 1 enterprise-level financial services customers, telecommunications providers, and government organizations who we service with our employee base of 700 IT network and engineering professionals. Our current focus right now is on the extremely high growth environment that we see in the Kingdom of Saudi Arabia and the rest of the Middle East right now, but we have worldwide presences. We have offices and presences in Canada, United States, Egypt, Saudi Arabia, Oman, and Turkey. And because of the high growth environment that we're seeing in our main markets, we're targeting $50 million of revenue in 2024 with that 10% net income margin. When it comes to what we do, like I mentioned, NTG Clarity is in the digital transformation business. And that means that we do a lot of software development work. So our business can be broken down into two major lines. One is outsourced software development services. And this is basically when one of our customers, be it a large enterprise telecommunications company or a financial services bank, wants to build out software projects, but they don't have the expertise and they don't have the manpower in-house. NTG Clarity will contract out some of our employees to help with that digital transformation work. Right now, outsourced software development services makes up about 95% of NTG's business. And our offering can be either on-site at our customers' offices or offshore from our offshore center in Egypt. We offer basically the full spectrum of technical expertise. So front-end developers, back-end developers, architects, business analysts, project managers, product managers, user experience designers, basically the end-to-end software development lifecycle we help our customers with. And it can be anything from a single developer to a team, all the way up to an entire department within an organization that we can contract out for our customers. As of Q2 2024, year to date, offshore services have made up 34% of our revenue, whereas on-site services have made up 61% of our revenue. The remainder of our revenue, the last 5%, comes from our proprietary software products and solutions, namely NTG Apps, which is our flagship software product. NTG Apps is a digital transformation platform which enables our customers to roll out, build, deploy, and maintain a fully customizable enterprise-level apps to help with their day-to-day operations. Some use cases can be anything all the way from an entire end-to-end ERP, enterprise resource planning platform, down to more niche telecom field service management and IT ticketing use cases, for example. One last thing to note on NTG Apps is that while in releases in the last few quarters have seen the proportion of our revenue attributed to NTG Apps fall, it was at 1.15%. At year end, I believe it was 10%. And then now we're reporting 5%. Although the proportion is falling, the absolute revenue is remaining consistent and showing even a little bit of growth. It's just that our primary offering of outsourced software development services is really what's highly in demand in our primary markets right now, and they're growing at an even faster rate. So let's talk a little bit about the investment thesis behind NTG, why invest with us now? And it really comes down to economic tailwinds in our primary market of Saudi Arabia, leading to our own growth that we've never seen before. So in Saudi Arabia right now, they have an economic development plan called Vision 2030, and it really seeks to diversify Saudi's economy away from oil and gas, as well as digitize the day-to-day lives of a lot of its citizens. So I'm sure you've seen a lot of the headlines, investments into infrastructure, tourism, sports and entertainment, being a hub for the region's financial services sector and financial institutions. So behind all of these initiatives, there's a lot of digital transformation work to be had. And since NTG has a 30-year track record working in the area, we're in a prime position to take full advantage of all this growth. A second point about Vision 2030 is how the Saudi government wants to digitize the day-to-day life of citizens. So they've established a digital government authority, which aims to transition citizens onto digital solutions for accessing things like healthcare, banking, and other government services. So really the private and public sector in the Kingdom of Saudi Arabia right now is experiencing a digital boom, and NTG is in a prime position to be the go-to service provider for that. I mentioned Saudi's goal of being a hub for financial services in the sector or in the region. Prior to 2020, NTG was more focused strictly on telecommunications and IT solutions, but since broadening our scope and expanding into the financial services sector, we've onboarded our first financial services customer in 2020, and it has since grown to be 70% of our business. So there's an incredible amount of growth servicing the IT needs of financial services customers in the Middle East right now. And then finally, since the pandemic, a lot of organizations are becoming more and more open to working remotely and working offshore. So as a result, we opened our Egypt offshore center in 2021, and since then, offshoring revenue has become 34% of our business as well. So there's an incredible amount of growth in the sectors that we're servicing and the new offshore model that we're offering as well, in addition to the overall economic environment in Saudi Arabia right now. And this all shows in the incredible growth we've been seeing in this chart below. Between 2019 and now, we're seeing consistent year-over-year growth in our revenues and cost reductions in no small part due to our new offshore offering, meaning greater margins for us. And we're looking forward to meeting that 80% growth target for 2024. So with that said, I want to dive a little bit deeper into the financials for this quarter. So I want to start with the income statement. Top line revenue, like I want to say a huge congratulations and a huge thanks to the entire NTG team for the hard work and commitment. Those same congratulations and thanks to our customers for their trust and confidence in working with us. But we've seen a 96% increase in revenue looking between Q2 2024 and Q2 2023. So this quarter we're up to $12.4 million in revenue compared to $6.3 million in the last reporting period last year. And if you look at the year-to-date revenue, we're up 94% as well to $24.2 million compared to that $12.5 million that we saw in 2023. Taking a look at the gross profit, gross profits are up this year, 81% to $4.4 million, up from $2.4 million at the same period last year. That does make a 35% gross margin for Q2 2024 compared to about a 38% gross margin for Q2 2023. Now, quarter to quarter, our gross margins have fluctuated a lot, and it's due to a lot of different reasons. It can be the makeup of the contracts that we service, so on-site versus offshore versus proprietary software products and solutions all have different margins and can impact our gross margin on any given quarter. But also any discounts that we're giving to customers to attract new work and any potentially higher cost contractors that we onboard to temporarily fill open seats with all of our amazing growth that we've been seeing as well. So in our line of business in the IT services sector, a good gross margin that we expect to see is anywhere between 35 and 40%. We're constantly working to improve the gross margin quarter to quarter, but a lot of these factors are at play. Specifically in Q2 2024, we saw a lot of demand for on-site resources, and costs associated with them traveling to their new working locations, as well as any costs associated with visas and work permits, really hit our gross margin in Q2 2024, which is why it's down at that 35% mark. But when you look at the year-to-date gross profit, that $8.9 million, up about 92% from year-to-date in 2023 at $4.6 million. Both Q2 2024 and Q2 2023 ended up with a 37% gross margin. So we're seeing some consistent performance year over year there. Continuing down the income statement, I want to talk a little bit about our operating margins. Specifically in Q2 2024, we had an operating margin of 21.5%. That's up from 18% in the same period in 2023. And for year-to-date 2024, our operating margin is about 20.5%, up from 19% year-to-date in 2023. So we've made a lot of investments in operations, both in 2023 and in Q1 2024. There was a little bit of concern back when we released our Q1 results that operating expenses were growing faster than our revenue, but now we're seeing a little bit of a reverse, right? Operating income up 130% in Q2 and 109% year-to-date. So our operating income is growing faster than our revenue at this point, and that's due in large part to seeing returns on the investments that we've been making. And those investments are things like putting more boots on the ground when it comes to a sales team. So in Q1, we definitely had a focus of recruiting more talent and putting salesmen on the ground to take advantage of all the growth that we're seeing in the Kingdom of Saudi Arabia. We also had a focus on trying to get ahead of talent recruitment. So we onboarded a few more resources that needed some training late in 2023, early 2024, that we were then able to place with customers and reduce our operating margins in that way. And then finally, the investments associated with our real estate. So opening a new office in Egypt has plenty of room to grow, for the foreseeable future. And we also actually have the first right of refusal on contracts with other floors in the same building. So with that, we really are confident in our ability to grow to meet any sort of demand coming up in the future. Moving down the income statement, I want to stop and talk a little bit about foreign exchange. Obviously, when we're working in all these different geographies, headquartered in Canada, primary revenue center out of Saudi Arabia, and primary delivery center out of Egypt, foreign exchange is a big part of our business. Now, this line, other exchange gain on translation, is effectively the foreign exchange on consolidating our Egyptian operations with the rest of the company. And we saw it was a pretty modest loss of $23,000 in Q2 2024 compared to a loss of $176,000 in Q2 of 2023. But if you look year to date, we've actually made a gain of $322,000 compared to a loss of $627,000 as of year to date 2023. So there is a currency devaluation situation happening in Egypt right now, and it's definitely very hard on a lot of the people that are living and working out of there. And as a result, NTG management has made the decision to transition Egypt from a sales center to more of a delivery center for our software solutions, software development, and offshore software development services. And as a result, at this time, year to date 2023, Egypt contributed 11% of NTG's revenue, whereas looking at Q2 2024 today, Egypt contributes just 2% now. So effectively what we're doing is paying expenses in a devaluing currency, namely the Egyptian pound, and then collecting revenues in stronger currencies, namely the Saudi riyal, which is pegged to the US dollar. And what we've been seeing as a result is we're able to make the best of a bad currency situation, hedge the devaluing Egyptian pound, and potentially make a little bit of gains on foreign exchange as well. Carrying on to net income after taxes, an incredible result for Q2 2024 at $2.4 million in net income. That's actually up 250% from the $698,000 that we saw in Q2 2023. Also looking year to date, we're up to $4.8 million. That's up 260% from the year to date in 2023 of $1.3 million. So if you take a look at the year to date, if we said our targets were $50 million at a 10% net income margin, we've actually almost reached it there. So that's why NTG management is really excited to take a review of our targets for 2024 and see if it would be appropriate to put out an update. So definitely keep your eyes peeled over the next couple of weeks for some more news on that front. But at the end of the day, we've really seen some incredible results in Q1 and Q2 with net income margins close to 20% in both quarters. Our investment into our operations performance along with our foreign exchange strategy has definitely resulted in a very strong bottom line, and we're looking forward to keeping the growth coming for the foreseeable future. Moving on to our balance sheet for Q2, I think first thing to notice is incredible improvements in our working capital that we made. So that's current assets minus current liabilities. We actually had a positive working capital of $2.6 million. This is the second quarter in a row it's been positive. And before Q1 2024, we had been negative since it was about 2015. So we're making incredible improvements on our balance sheet right now. So we had a positive working capital of $2.6 million as of June 30th, 2024, and that's compared to the deficit of $2.1 million as of year end. If you take a look at our current assets, a large portion of them are receivables. It's about just over $12 million of receivables in our current assets. So receivables are actually up about 95% in Q2 2024 compared to the year end. And that's in part expected just because of the rapid growth that we've been seeing in our business and also due to a little bit of contract timing. But what's also notable is that in Q2 2024, there were two major holidays in the Middle East that had some impacts on our billing cycle. So you can definitely see that a few receivables are starting to slip in the aging above 60 days. But we're confident that it was just a disruption due to holidays and not something systemic. Actually, in the month of July, so after the reporting period that we're discussing, in the month of July, NTG Clarity has collected more than $6 million in receivables so far. And this is more than 50% more than we were projecting, even considering our massive growth this year. So that definitely made up for the reduced receivables that we saw over the holiday season, and we're looking forward to some strong collections in Q3. Continuing on to our liabilities, the non-current liabilities section, which is $6.3 million. It's important to note that 6.2 of that $6.3 million is long-term debt owned by a numbered company, which is controlled by NTG CEO and NTG president. So a large portion of the long-term debt is owned in friendly hands. And as a result, there are no specific repayment terms. Management is really keen to protect the company's cash flow and keep the effective interest rate on that debt effectively under 1%. So we are committed to paying out our long-term debts, but it really is as cash flow permits. So far in Q2 2022, we've repaid $150,000 of this long-term debt, and that makes a year-to-date total of $300,000 paid down towards this debt. To take a look at our deficit, which was wound up from previous operations, we have a just about $16 million deficit. That's compared to a $20.5 million deficit as of year end. So our improved operations over the last few years have definitely resulted in us chipping away at our deficit. And it has resulted in a positive shareholders' equity for the first time since 2016. And that shareholders' equity is $1.8 million compared to the $3.2 million that we saw at year end. So all in all, really happy about the improvements that we've made in our balance sheet and looking forward to being in a stronger receivables position going into Q3. And finally, I want to take a look at the cash flow statement for Q2. So I'll take a look at each of the lines from the cash flow statement, starting with total cash inflow from operations activities, so from operating cash flow. It's notable to see that in Q2 2024, operating cash flow is actually down 74% from the same period in Q2 2023. And in year-to-date 2024, operating cash flow is down about 10%, closer to 20% from the same time year-to-date in 2023. And this goes back to the same point that I was talking about when I was discussing our receivables. Even though we have a very strong net income and there's been a lot of improvements in our net income, the increase in receivables has led to a little bit of a constraint on our operating cash flow this quarter. And again, that was due to primarily the two major holidays in the Middle East, both falling in Q2 this year and disrupting the billing cycles accordingly. Like I mentioned in the last slide, since quarter end, in July 2024 so far, NTG has collected $6 million in receivables, more than 50% more than what we were expecting for this month. So it definitely made up a lot for the receivables that we're expecting. And we're hopeful that cash flow will be in a better shape going into Q3. When it comes to cash outflow from financing activities, we see it's about the same Q2 2024 compared to 2023. It's actually gone up closer to 50% year-to-date 2024 compared to 2023, and that really is due to our focus on debt repayment and paying down our long-term debts as cash flow permits. So that's the reason behind the higher cash outflow. Finally, cash outflow from investing. We're seeing actually a pretty significant drop, 76% down in Q2 2024 from Q2 2023, as well as 65% down year-to-date 2024 compared to year-to-date 2023. And this is due to the fact that NTG has not capitalized any expenses for the development of our NTG apps platform so far in 2024. We have been capitalizing for a few years prior, but as of 2024, we really think that the platform is reaching a mature and steady state, so we're ramping down our investment onto further developments. We may still make some more improvements and developments in the future if our customers do demand it, but for now, we're happy with where the product is, and we haven't been capitalizing any of our NTG apps expenses in 2024. So that concludes my presentation about Q2 results 2024. Again, my hat's off to the entire NTG team and to our customers for making this growth possible. It's really great to be entering the second half of 2024 on this strong note and seeing so much positive growth. I want to now transition to the question and answer period. So a lot of you, thank you, have written in questions to be answered during the Q&A period. So I'd like to invite Ali Farouk, an analyst from the NTG Clarity team, onto the screen to start reading out our questions whenever you're ready.
Hello, everyone, and thank you, Adam, for that introduction. And without further ado, let's get into our first question. So our first question is written in from Chris from Activate Capital. Have management seen a bigger focus on digital transformation in the countries around Saudi Arabia? And can we expect to see more revenue coming from these other regions in the near term? Or is it more isolated to Saudi with the Vision 2030 initiative?
Yeah, thanks, Chris, for the question. I just want to say definitely our primary focus right now is taking full advantage of all the growth that we're seeing in Saudi Arabia with the Vision 2030 initiative. Like that, Saudi Arabia is the biggest economy in the region. It probably makes up half the economy of the region as well. So taking advantage of all the rapid growth that we're seeing there is priority number one. That being said, we do work with a couple of other companies and customers in the countries in the surrounding area. Oman jumps up as a good example. We've been working with a large telecommunications service provider in Oman for more than 10 years now, and there's been a consistent demand for our proprietary software products and services coming out of Oman. But what's especially noteworthy is other countries in the region are also on digital transformation journeys, one being Iraq. Now, Iraq is very early on in its digital transformation journey, but it is an emerging market and there is a lot of demand to digitize a lot of its systems. So especially our proprietary software products, NTG apps, has been in demand and we've been able to distribute it effectively through a channel partner in the region. So you'll notice that over the last couple of years, since we started doing work in Iraq, revenue from there has grown from nothing to be about 2% of NTG's revenue. So there are other exciting developments going on in the Gulf region that we're actively taking advantage of at this point.
Okay, great. Our next question is coming from Michael from Cooper Investors. Is management planning to expand their business in Canada and the US using the clear advantage they seem to have with the Egyptian outsourcing office? Is M&A a strategy the board is considering?
All right, right on. Thank you, Michael, for the question. To start off with, I always like to hammer down on the point that management right now is remaining absolutely laser focused on our number one priority, which is taking full advantage of all the growth that we're seeing in the Gulf region, specifically the Kingdom of Saudi Arabia, but also in emerging markets in the surrounding regions. I named Iraq as well. After that, our next priority would be doing a little bit of expansion and diversification geographically. At the end of the day, NTG's vision and mission is to make digital transformation accessible worldwide, and our offshore offering based out of Egypt is extremely competitive. It oftentimes results in 50% savings for our clients compared to hiring local on-site staff, and all while being faster to deploy and at a higher margin for NTG. So it is an extremely powerful value proposition. So, when we look towards strategizing for the next 2, 3, 4, 5 years, making an entrance back into North America is definitely on our list, either through some organic initiatives that we have, but we're also very open to and exploring the possibility of doing a little bit of mergers and acquisitions to make the transition and re-entry into the North American market a little bit more expedient.
Okay, awesome. Our next question is from Brennan from Keystone Financial. In terms of growth/business resulting from KSA's Vision 2030, can you quantify what inning NTG is in from this boost? Are you in the early innings, mid innings, or later innings?
Okay, right on. Thanks, Brendan, for the question. I would definitely have to say that we're in the early to mid innings of the Vision 2030 project. And that's to say, yes, it has been several years. It was the late 2010s when the Saudi government first unveiled its plans for Vision 2030. But that was really more of, the pitch decks were released, the planning was starting to be done. What we're seeing now in the region is really where the investment hits the ground. The projects are starting to be built out. We're seeing the infrastructure projects. We're seeing huge growth in the financial sector, as is evidenced by all the work that we're getting from our financial services customers. So there's still 6 years of growth left on the Vision 2030 plan. A lot of the projects that have been planned out are being put into practice and being built out right now. So there's still a lot of room for growth. I would definitely say we're in the early to mid stages of the plan right now.
Okay, great. Our next question comes from Joe, one of our investors. Could you tell us how you're managing and handling the hyper growth you get? Are you able to get ahead of it or just try to keep up with the demand as much as you can? What's your plan as it will continue for many years?
All right, right on. Thanks for the question, Joe. So we're definitely trying our best to get ahead of the growth. I would say there's a couple of different ways that we think about preparing for growth. Growth for any company is going to be a challenge. Like it's a nice problem to have for sure, but it's a challenge for any company. The main pillars that we look at are, getting the right talent on board. So I mentioned in late 2023 and Q1 2024, we were making a lot of investments in expanding our sales and marketing team to take full advantage of the environment in the Kingdom of Saudi Arabia. And in addition to that, making investments in so there's a sales and marketing aspect to it, but also making investments in making sure that we're able to provide our services at the scale that the growth is pointing towards. So in 2023, we opened a new office out of Cairo, Egypt, to house our Egypt Offshore Center that ended up being the main campus of our Egypt Offshore Center. And that office still has plenty of room to grow. We say that we have enough room to house offshore staff for the foreseeable future, but in addition to that, we also have the first right of refusal on contracts for other floors in that same building. So we have a lot of room for growth when it comes to accommodating all of the staff that we need to onboard. So when it comes to talent and accommodation, we've definitely tried to get ahead of the growth. But one thing that we also keep in mind is financing. Now, thankfully, for years now, we've been very comfortably self-financed ever since the restructuring in 2019 that saw the Ontario company owned by management take over the majority of the debt. Self-financing has been very comfortable, and we're trying to go forward with the attitude that we want to make our dollars count, and we don't want to overextend ourselves when it comes to leverage. So remaining in a strong financial position is also very, very important to NTG management.
Okay, great. Our next question is from David, one of our investors. What unique risks and benefits does NTG have being a Canadian company as opposed to being HQ'd locally in the Middle East? And how does the company mitigate or leverage them respectfully?
That's a good question. Thank you, David. So as a little bit of a history lesson, I guess, it wasn't 100% intentional to be headquartered in Canada, but do 99% of our business in the Middle East. It actually was just a result of economic trends. We started in Canada. The economic climates definitely favored the Middle East, especially in recent years, but even especially after the dot-com bubble and 2008 financial crisis. We ended up doing the majority of our business in the Middle East. But that being said, there are a couple of advantages, I would say, to being headquartered in Canada. And those include things like really strong support programs. For example, Business Development Canada and the related bank is a very strong source of financing for businesses that are out of Canada. Export Development Canada, or EDC, often provides receivables insurance. And in the past, NTG has taken advantage of both of those offerings. It hasn't been since the restructuring in 2019, but we're actively looking to take full advantage of all of the wonderful programs that come as perks of doing business in Canada. I would say one other advantage, and this is definitely going to be important, is the exposure to the North American markets right now, especially in the context of, when we talk 2, 3, 4, 5 years down the line, talking about expansion into North America, Canada, and the United States, either organically or through M&A. Being headquartered in Canada definitely gives us a head start on the game there, and we're even able to, start scoping out opportunities a couple of years in advance. So a big advantage to being headquartered locally in Canada from that aspect as well.
Okay, our next question is from Sergi, an independent analyst. Should we expect top line H2 to grow versus H1 or to be relatively flat half over half? What's the outlook on 2025? Do you think you'll be able to grow revenues and net profit versus 2024?
All right, right on. Thank you for the question, Sergi. So let's talk growth. I think it's a little bit too early to be giving guidance for 2025. I mean, we're still talking about updating the guidance for 2024, but we definitely will provide the guidance in a similar manner to what we did in 2024 a little bit later on in the year. But that being said, the growth environment is there in the Kingdom of Saudi Arabia, our main markets. Like there's still a lot of investment going on in digital transformation. Our own customers, from our experience, are consistently renewing the contracts with us and negotiating new contracts for more work. It's interesting to note that about 50% of our revenue is recurring at this point, and we're looking forward to growing that as the economic situation continues to strengthen in the region. So, there's strong economic, I guess, tailwinds in the region, as well as our customers showing that, we have a reputation of providing quality products and services, and they're looking forward to carry forward their relationship with us. So things are looking good for 2025 for sure. When it comes to comparing the first half to the second half, as I mentioned with our Billed revenue so far in 2024 year to date of about $24 million, along with that $26.7 million in a backlog, most of it expected to be billed in 2024. We're in a really strong position to hit that target of $50 million for the year. So that'll show really strong, consistent, averaged out 80% growth over 2023. And, as we see growth half one to half two, it'd probably be closer to the growth that we saw, for example, Q1 to Q2. But all in all, still extremely rapid growth that we're extremely proud to share with you guys.
Okay, great. Our next question comes from Chris from Activate Capital. If the momentum continues, it looks as though the cash balance is going to grow rapidly over the next couple of years. Could investors expect to see a formal dividend policy put in place?
Hey, right on. Thanks for the other question, Chris. So yeah, definitely cash is something that we want to keep our eyes on. Like I mentioned in the presentation, operations cash flow was a little bit constrained. Number one, just due to growth. When companies are growing as fast as we are, 90%, 80%, in some quarters, 100% year over year growth, the cash is tied up in receivables a lot, and we can kind of expect a lower operating cash flow, a little lower free cash flow, lower cash conversion. But that being said, especially coming out of this quarter with the holidays, we expect to see a bit more cash come through in Q3. As I mentioned, we were very successful with the collections coming out of July. So as we look to see a little bit more cash come through into the company over the next couple of quarters and over the next couple of years more broadly, we're going to be looking at, what's the best corporate finance decision to make to invest all of that cash that comes out. Now, you mentioned a formal dividend policy. And when it comes to that, that's something that management is definitely considering, but something that's not on the roadmap as of right now. And that's just because when you see all of the growth that we've been seeing, that 80, 90, 100% year over year growth, we really think that the best investment for the cash that we're seeing is to reinvest in that growth right now. I think you could definitely describe NTG right now as an IT services growth company. And the results of the cash are going to be into investment and taking advantage of the growth in our current market, but also potentially expanding into other countries in the region and then eventually worldwide, as we talked about a little bit with the North American strategy and the M&A. So we're definitely focused on growth right now. Dividends are something that's on our radar, but not on the roadmap. But potentially in the future, if the growth starts to sort of asymptote or taper off, it's something that management is open to exploring for sure at a later date.
Okay, our next question is from David again, our investor. What are the future plans for NTG stock listing? Is the company interested in uplisting to a bigger exchange? If so, what hurdles need to be cleared in order to do so? And is there any timeline associated with it?
All right, right on. Thanks, David. So when it comes to uplisting to other exchanges, I get the question a lot from investors. You should uplist to the TSX, you should uplist to the NASDAQ, that kind of thing. What we're really focused on right now is growth and continuing our growth. Not just on our market cap, which has thankfully over the last few days, there's been a lot of growth in the market cap for sure as the market takes notice of our performance, but also just of our business fundamentals. Like our main focus is growing the business, growing the market cap, and we almost see that uplisting to other exchanges like the TSX or the NASDAQ will come as a natural part of our growth later on down the line. And we definitely see it as advantageous. Like it would be very good to trade on these other exchanges, but our primary focus is on the business fundamentals. So it's not something that we have a timeline associated with right now, but something that will probably come more naturally as we continue to grow. Definitely, when we start looking at TSX and especially on NASDAQ, it will be in the market cap of hundreds of millions. So we have a ways to grow yet, and we're just going to keep focusing on the fundamentals until then.
Okay, our next question is again from Sergi, the independent analyst. What are the immediate risks that the company is facing?
Right, I would double down on the risk around growth that I mentioned a little bit earlier in the Q&A session. So like I mentioned, like growth is always a challenge for a lot of companies. Thankfully, NTG has performed very well from a growth standpoint of growing the top line at incredible 80, 90, 100% rates while maintaining, if not improving, our margins at the bottom line. So we're really looking forward to leveraging our strong financial position or our strengthening financial position, as well as our talent network and the investments that we've made in operations over the last few quarters to really rapidly but stably continue our growth. Um, so risks around growth and growing the company effectively while maintaining margins is definitely one that's at the top of management's mind. But so far, so good. I think it's safe to say that we've been performing so well on it.
Okay, our next question comes in from David again. Um, Recent Canadian tax laws regarding capital gains have changed to increase tax revenue from larger stock sales. Understanding how insider sales might undermine share price growth, how are insiders now approaching their anticipated selling in light of these changes? Are there certain triggers already in place for insider sales? Examples, date or share price? Are any inside sales anticipated sooner in the next few years?
Okay, right on. That's a good question, and it's one that I get a lot from retail investors for sure. Thank you, David, for writing in the question. When it comes to insider sales, I always have to fall back on it's definitely a personal finance decision from each individual management figure. Especially for companies of our size, stocks and share options are a big part of the compensation structure for key management teams. So it's almost to be expected that a little bit of selling will be happening now and then, just so that management can pay the bills just like anybody else. That being said, there is a huge amount of management buy-in with NTG. About 46% of the shares outstanding are owned by management, either through the CEO, through the president, or through the numbered company that's owned jointly by them. So there's already an incredible amount of management buy-in. So it's always important to take into perspective, what proportion of the shares are being sold off to decide, is there something systemically wrong versus um, does management just have to pay bills just like the rest of us? I think the key takeaway here is that management has always been heavily invested in the company and believed in the company, and they continue to do so. They wouldn't have put up the money to restructure the debt and buy out the debt from the bank in 2019 if they hadn't. So there's still an incredible amount of belief and investment in the company from management, and we don't expect that to change anytime soon. Okay, I think we've run out of time for the question period, but again, I want to thank everybody who's written in questions for us today, and thank you, Ali, for reading out the questions for us today. That was really helpful. I appreciate it. I think that brings us to the end of our agenda for this exciting Q2 2024 earnings call. Again, everybody here at NTG is really excited about all the growth that we've been seeing in the recent years, and especially in these last few quarters that have really seemed to be breakout quarters. Huge amount of work that's been going on in the background from the team, everywhere from sales and business development to implementation and delivery teams. Everybody's been working really hard to bring this growth to us, and all of our customers for their confidence and for their trust in NTG. We couldn't have done it without them as well. Um, I really appreciate you as the shareholders tuning in today and giving your feedback and writing in your questions. It was great to discuss our Q2 results with you. One thing that I'd ask from you, though, is I'm looking for feedback on how this Q2 earnings call went. So it'd be great if you write me an email and reach out. I'm always looking to improve, if it's on the format, if it's on the content that was covered, or changes around the Q&A session. I really want to make these types of earnings calls as useful as possible for you as the investors. So I'd love to hear some feedback. You can reach me at my email, which is adam@ntgclarity.com. And I'd be happy to hop on a call too to have any discussions. But for now, thank you very much. And I'm looking forward to speaking soon about Q3. Thank you.